The Digital Asset Summit USA 2025 has concluded, leaving us with groundbreaking insights into the evolving cryptocurrency landscape, from institutional adoption to regulatory shifts, and even the potential creation of a U.S. Bitcoin reserve. This year's summit set the stage for what could be the biggest transformation in digital finance. Crypto is no longer a niche market, it is becoming an integral part of the global financial system. This summit came at a critical time for the digital asset industry. Over the past 2 years, crypto has seen massive fluctuations, from regulatory crackdowns to institutional hesitancy, followed by an unexpected surge in interest from major financial players. With Bitcoin and Ethereum reaching new yearly highs and tokenization gaining momentum, the discussions at the Digital Asset Summit provide a roadmap for the future of blockchain finance. So, what were the biggest takeaways from this event? Let's break it all down in detail. Institutional investors are returning to crypto. One of the biggest narratives of the summit was the resurgence of institutional interest in cryptocurrency. Over the past few years, major financial players had been hesitant, largely due to regulatory uncertainty and market volatility. However, 2025 is proving to be the year of institutional comeback, with hedge funds, pension funds, and private wealth firms re-entering the space with confidence. Regulatory clarity has played a crucial role in this shift. Many institutions had been waiting for clear guidelines before making large investments. With regulators now working more closely with industry leaders, the risks associated with crypto investments are gradually decreasing. Bitcoin's stability has also been a driving force. It has shown remarkable resilience, bouncing back from multiple crashes and maintaining its status as digital gold. Its increasing scarcity, thanks to the recent halving event, is making it even more attractive to institutions. Another major factor behind the institutional comeback is the rise of tokenization of assets. Institutions are seeing real-world applications of blockchain technology, particularly in tokenized assets such as stocks, real estate, and commodities. Representatives from BlackRock, JP Morgan, and Fidelity discussed how they are actively exploring tokenization and blockchain-based investment products. This is a massive shift from just a few years ago, when these firms were hesitant about digital assets. The rise of tokenization, a $16 trillion opportunity. Tokenization was one of the hottest topics at the summit. In simple terms, tokenization refers to the process of converting real-world assets into digital tokens on the blockchain. This allows assets to be fractionally owned, instantly traded, and easily transferred without the complexities of traditional finance. Experts estimate that over $16 trillion worth of assets could be tokenized by 2030, creating new liquidity and investment opportunities across multiple industries. Traditionally, assets like real estate and fine art have been illiquid, meaning they take time to sell. Tokenization makes it possible to buy and sell fractional shares of these assets instantly, just like stocks. With tokenization, high-value assets can be divided into smaller, more affordable shares, making them accessible to a broader range of investors. Blockchain-based tokenization also ensures full transparency, reducing fraud and increasing investor confidence. At the summit, multiple firms showcased how they are leveraging blockchain for tokenized investment products. For example, Goldman Sachs unveiled plans for a tokenized bond market, allowing investors to trade government bonds instantly. Fidelity announced a new platform for tokenized real estate, enabling fractional ownership of high-value properties. Ethereum developers revealed how layer-to-scaling solutions will play a critical role in supporting tokenized finance. With major financial institutions embracing tokenization, we are witnessing the beginning of a major financial revolution that could transform how we buy, sell, and trade assets. Regulation, a turning point for crypto. Regulation has always been a controversial topic in the crypto space. However, at this year's summit, the tone was different. Instead of fearing regulation, industry leaders welcomed it, emphasizing that clear regulations are essential for long-term growth. Over the past few years, crypto has been caught in a regulatory limbo, with agencies like the SEC and CFTC battling over jurisdiction. But now, discussions suggest that a framework is finally taking shape, one that balances innovation with investor protection. Stablecoin regulation was a key topic of discussion, with talks of a U.S. government-backed stablecoin acting as a bridge between traditional finance and crypto. The success of Bitcoin ETFs has also led regulators to consider Ethereum ETFs and even Solana ETFs. A new crypto tax framework is expected to simplify reporting and reduce compliance risks for investors. For investors, this means that the days of uncertainty may be coming to an end. While regulation will undoubtedly bring stricter compliance measures, it will also bring greater legitimacy, encouraging more institutional and retail adoption. The biggest shock: a U.S. Bitcoin reserve. Perhaps the most shocking revelation at the summit was the discussion about a U.S. Bitcoin reserve. Reports suggest that the White House is considering holding Bitcoin as part of its strategic financial reserves, much like it holds gold. The idea of a government-controlled Bitcoin reserve has sparked huge debates within the industry. If implemented, it could validate Bitcoin as a legitimate store of value, encourage other nations to follow suit, and reduce the volatility of Bitcoin by removing a significant portion from circulation. However, there are also concerns about government control over Bitcoin and how it might impact decentralization. Regardless, this discussion has already led to a significant price surge, reinforcing Bitcoin's position as a global financial asset. Market movements after the summit. The impact of the Digital Asset Summit USA 2025 was immediate. As discussions unfolded, the crypto market reacted strongly, with Bitcoin and Ethereum hitting new highs for the year. Bitcoin surged past $72,000, driven by institutional accumulation and optimism over a potential U.S. Bitcoin reserve. Ethereum crossed $4,000, fueled by ETF rumors and strong interest in tokenization. Altcoins saw a massive rally, with Solana, Avalanche, and Chainlink leading gains due to their real-world use cases. The crypto fear and greed index flipped into extreme greed, signaling a shift in market sentiment. While the bullish momentum is strong, experts at the summit warned of potential volatility in the coming months. With upcoming interest rate decisions, regulatory changes, and global economic shifts, the market could see price fluctuations before stabilizing. Final thoughts: what this means for investors. The Digital Asset Summit USA 2025 reinforced one thing: crypto is not just a passing trend, it's a revolution. With institutions coming back, governments exploring digital asset reserves, and tokenization transforming traditional finance, we are witnessing the next phase of financial evolution. For investors, this means they must stay informed about regulatory updates, as clearer rules will shape the future of crypto. Watching institutional activity is crucial, as their investments can signal long-term trends. The impact of tokenization should not be ignored, as it could unlock new wealth-building opportunities. The future of digital assets is more exciting than ever. We are no longer just talking about crypto as a speculative asset, we are talking about the foundation of a new financial era.